All right, and with that, we got our man Teddy Kekstadt. He's all set. Folks, head on over to the front page of TFNN. There's your Tiger Forex Report. You can sign up for $97. I just showed you a glimpse of that report. It comes with a 30-day money-back guarantee. Teddy Kekstadt, good morning.
Morning, Tommy. How are you doing?
I'm doing good. How about yourself?
It's freezing cold in Chicago and getting colder.
Oh my goodness. That windy
Single
city,
digits
man.
tonight, baby.
You guys got some a different kind of chill when you get that wind, man. I was telling Tommy yesterday or a couple of days ago, we get, I enjoy it, of course, being from the Northeast. This is why I'm here. We get this beautiful weather, but it is amazing how spoiled we are, Teddy. It gets down to like 58 degrees, and Tommy's getting out of the bath, right, and he's freezing. And I'm saying, man, you're so lucky. You wouldn't believe, Tommy, what people are going through in different parts of the country. Anyway,
that's shorts weather.
And we got it made, man. We are. You know what I mean? We're out. We're going to parks. But it is funny, that little chill we get occasionally, he doesn't know what exists in terms of the Northeast and then the Windy City cold. Right. This market is pretty hot. Not cold at all. CPI pretty much in line today. What are you watching in this market, Teddy?
Well, I'm watching, obviously, the interest rates and on the dollar index going into the Fed meeting. I would expect that, except for the numbers now over the next couple of days, we're going to settle into a range trade. It's not. I wouldn't have very high expectations as far as how much volatility you're going to see or any follow-up. I'd be very careful looking for any real trend moves on any intraday action over definitely the next few sessions. So we're going to have the release on Wednesday. I would be shocked if they didn't cut a quarter point. I think a quarter point is probably as high as they're going to go. We still have lots of signs of inflation. The only things that have really pulled back a little, because at least oil price has been now stable for the past 2 months. So in that regards, margins have leveled off. They haven't gotten better, but they've leveled off. They haven't been spiking. So that's the only relief you're going to see probably in the economic sector at all, as far as those kind of numbers are going to reflect, which isn't really going to show until probably January, and it's going to be very nominal. So I really don't look at today's CPI number as any real big deal. When we have a real big dip in CPI, like something that starts a trend where you're like, oh, last month it was this significantly lower and we're lower again, I think then you're going to see something that's going to actually impact the markets. But being flat, that doesn't say very much right now. That just means that we're not accelerating. So I really don't take the CPI. I don't take very much stock in. I think you really need to watch out more for unemployment claims tomorrow. And then obviously the reaction on the Fed. I think that you're probably going to see, like you're seeing today, a little uptick in yields, but not much. Right now, yields are up slightly today, but they're coming off a new daily low, or high actually, as far as in yields and lower pricing. So the fact that they're up slightly today, we're only up slightly higher than we settled yesterday, but we still took out yesterday's low. So I think that today that's a key area to watch as far as interest rates. And we'll probably see it rally a little bit into the meeting. But after the meeting next week, I wouldn't be surprised if you take out the low from from today.
And we said, Taylor, take the low for lower price, higher yield?
Yes, correct.
Yeah,
correct.
Perfect.
Yeah.
And the dollar, it's remarkable. We've been talking about it for a while. It's been pushing this 106, 107, 108. We just hit 106.80 in the pre-market. We're still at 106.52. Talk to me about the dollar a little bit. Quite a 2-year consolidation, but
Sure.
we're pushing the upper boundary right now. What do you think about the dollar?
Short term on the daily, I think that today, it just like yields spiked this morning to the downside, meaning higher yields now coming back, going towards the lower direction into the Fed meeting. I would watch today's high in the dollar index. If the yields are acting that way, you should probably see today probably being the high of the range for the next few sessions, unless you have any real knee-jerk reaction to some numbers and get it definitely like higher yield pricing. Because if you look at the chart pattern on the dollar index, Friday's low definitely, in the Tiger Forex Report, I put it higher low, question mark, question mark, question mark, not trying to pick a bottom. interesting thing about that is that low would also be the bottom for a neckline for a head and shoulders. So if we were to take out Friday's low, I could see us getting a nice little slide down. Probably I would say we're testing our downside breakout level, which is around 104.32 in the dollar index. Should we get down to that, well, then we might actually start to see a little bit of a slide where we could get down. Remember, there's a gap, if you look at the dollar index chart, that goes back to November where we gapped open, and that's when we started this big rally that we topped out in a couple weeks ago. According to basic technical analysis, all gaps get filled, right? Eventually, especially when you're talking about something like an index, or unlike a stock, an index is only going to go so high. There is, no matter what, there is a high in the dollar index. It can only go, just like interest rates, there's only so high it can go. Eventually, you're at zero interest rates. Okay, so unlike a stock that could technically go to infinity, if you will, right? There's a floor in the stock pricing, but there is no ceiling. Okay, so I think that's kind of where we're looking at, where we're going to be in a range trade between today's high and the low that was set on Friday in the dollar index. Those are key areas. If we take out the high from today, I think it's going to be a grinding high, just because we're coming into the Fed meeting. I'd be very cautious. I'd be more of a sell rally trader as far as the U.S. dollar over the next few sessions, just because I think that you're going to have a good selling opportunity when it comes to that, since we're coming into the Fed meeting. You see what I'm saying? So I would wait for rallies and sell them. As far as dips, I'd be very cautious right now. So I would be more of a sell, wait for an exacerbated rally to sell into on an intraday basis, but don't have high expectations. And that's why I'm saying don't expect follow through. That's where I think you get to be able to pull off that trade.
That's great info, man, and that's where we've been chopping around for a while right now. Teddy, I appreciate it as always, man, and we'll talk to you next week. Last time before we come into that holiday trading, and we get to talk to you on Fed Day next week. Even better, man. Have a great week. Right. We'll talk to you next week, and stay warm, Teddy.
Take care. Thanks.